bạn, ngày hôm nay chị Phi Vân làm một cái chuyện rất là hết sức cố gắng, đó là mời trong 2 ngày hội thảo ngày hôm nay và ngày mai, tất cả những chủ đề mà chị cùng với lại bên COEX làm là giúp cho các bạn có một cái nhìn rất là tổng quan về thị trường và giúp cho các bạn có những cái kiến thức về nhiều cái lĩnh vực khác nhau liên quan đến nhượng quyền và bán lẻ. Do đó mà đến sáng hôm nay thì chị còn phải gọi điện và mong và nhắc nhở, tại vì đây là 2 cái người mà có cái kinh nghiệm gọi là top ở trong ngành rồi, thì người ta đến đây ngày hôm nay để chia sẻ với các bạn một cách open như thế này, không lấy một chi phí gì hết, thì đó là một cái sự phải nói là đóng góp rất lớn cho ngành, và chị mong muốn các bạn cho một tràng pháo tay rất lớn để cảm ơn hai anh. So first of all, I would like to, we'll speak in English. Is that better? Okay, so first of all, I would like you to introduce yourself and probably a little bit about your company so people know a little bit of the background. Maybe I start with you.
Okay. My name's Ken Atkinson. I'm the chairman of Grant Thornton in Vietnam. I've been in Vietnam for 26 years. Got my first license after 3 years of trying in 1993. And in 1994, I took on the Grant Thornton name. Grant Thornton actually is, whilst it's a global accounting firm, very similar in service provision to the big 4 accounting firms. We are actually independent. We're locally owned, locally managed, so we operate in the same way as a franchise. So I think I can claim to have been one of the first franchisees in Vietnam back in 1994. And I've been running Grant Thornton ever since. So I'm very happy to be here.
Thank you, Ken. Nikhil?
Hello. Yes, my name is Nikhil Singh. I'm the general partner and chief investment officer of a group called the Longfort Group. We are a private investment firm investing regionally, but in Vietnam, we are investing in restaurants and the retail space. We have an investment program to launch 100 restaurants in Vietnam in the next 7 years. We acquired a brand called Luzin. Luzin is a famous coffee shop concept store in Vietnam. We launched a brand called Namo, and you'll see more restaurants and stores rolling out soon.
So everyone needs to see you after this. You're going to launch like 200 restaurants, right? Fantastic. 100. Fantastic. So the first question would be, well, 100 from me. Okay, so the first question I would pose would be, franchising is very, very new in Vietnam. So as an expert in the financial sector, what do you think would be whether the industry is well prepared to support the growth of the industry in the future?
Okay. Always dangerous to be described as an expert. I'm not an expert. I think we operate on varying degrees of ignorance in Vietnam, particularly as expats. So let's get that line set. I mean, yes, generally speaking, franchising is quite a new area in Vietnam, but I think over the last 12 months, it's taken off significantly. And a real growth in interest, both from franchisors and franchisees. But like many sectors in Vietnam, the ecosystem to support franchisors and franchisees is really in its very early stage. It's in its infancy. And I don't believe that there is a supportive financing structure or financial institutions are not prepared to be creative when they're looking at their financing solutions. So my concern is that for you guys that are taking on master franchises or local sub-franchises, you need to think very, very carefully before embarking on how really you are going to finance this. I've got a few tips which I can share later, but Nikki.
I would just add a few points. The first is it's probably a little easier having an international brand, having a business model, having the operating manuals than if you just did a startup on your own. So while it's a little bit better, it's still very difficult to finance startups anywhere in the world, much less emerging markets, frontier markets like Vietnam. So it's going to be tough if it's a startup. So, there are some people out there are venture capital firms out there, there are some mezzanine funds out there, but generally I think, especially with some of the not so premium brands, you're going to have to tap your friends and family. And, you might as well get used to that. So, and start asking around. But I've seen in Vietnam very quickly, being a very social economy, that you can pull together a group of friends and some startup capital quite easily. And it's that first financing round that's the hardest. And then as you establish yourself and have a track record, things get easier.
Nick, are you saying that if I'm a master franchisee for Vietnam and I buy an international brand to bring into Vietnam, it will be easier for me to get financing from you?
Yes, as opposed to, something you discovered or created on your own.
Right, okay. And what would be the sources of financing services available for master franchisees at the moment?
Well, generally a venture capital fund would really look to provide equity capital. They would do it in a form where they have downside protection. They would generally want to sit on your board. They want control of your business. But, that's probably the first place to start, would be venture capital.
Have you seen any examples of that happening in Vietnam?
Well, I think, as Nikki said earlier, you've got to differentiate, I think, between real startup and first phase, what I call first phase capital, which really is, I think, family and friends. I would totally agree with that. When you get on to second phase or later stage capital, then there are private equity groups around that will look to invest. But there's always a balance. How much of the equity do you really want to give away? So the kind of agreements you negotiate with PE investors are really quite critical for the long term of the business. And I think, again, I would agree that if you have an international franchise, of course, things are very much easier. One of my notes to myself was to raise the issue, if you're starting on a franchise, there are lots of costs that you might not consider when you come to do your budget. For example, things like public liability insurance. Insurance isn't that common in Vietnam, but that's something you're definitely going to need. And there are lots of other costs that you might not really think about when you're doing your budget and your development plan. So I think you really need to, if you're working with an international franchisor, they will give you all those items that you have to build into your cost budget. So, and obviously anybody looking at investing or financing will feel more comfortable with an international brand because it's already got an established track record. And if it's worked in other countries, particularly other countries in Asia Pacific or Southeast Asia, then the chances are that it's going to work in Vietnam, although we might need to add a little touch of Vietnamese to it. But
so for the brands that you are investing in at the moment, Luzin and Namo, right? Is it an equity investment or is it financing?
Yes, so we currently have 3 brands in Vietnam: Luzin, Namo, and a brand called Sizzling Steak, which is a mass market beef brand. Luzin was an acquisition. We bought the brand, so we own 100% of Luzin. We hope to grow Luzin in Vietnam and regionally and franchise it out to other countries as well. On Namo, that's a brand we created. It's not so easy to create a brand. You have to invest a lot in it. You have to really have a story. You have to have a unique selling proposition. And this is a brand also we would like to grow and franchise out. And finally, Sizzling Steak is a brand that we franchised from a group called the MGI Group in the Philippines. They are one of the largest restaurant groups in Southeast Asia. And so they're helping us roll this out here.
So Luzin being a local company, isn't it?
That's correct. Công ty Luzin.
Yeah. So is there an opportunity for Vietnamese to create local brands and for you to actually take over?
Yes, and it's already happening. And you'll see many fantastic world-class brands being developed in Vietnam. I'll give you a couple examples. Maru Chocolate. I don't know if any of you have heard or tried Maru Chocolate. But just a fantastic brand. They've just opened a salon Maru. We're not associated with the Maru brand. It's just an example of a fantastic locally grown brand. Another great international standard brand grown out of Vietnam is the Pasteur Street Brewery. That was launched, I think, 2 years ago or so, but you're really taking the craft brew movement by storm here in Vietnam, and we think they're going to go far. And of course, you have the local brands, you know, like Trung Nguyen, Highlands, etc. I mean, Highlands was now, you know, rolling out in the Philippines. I saw a few cafes there, so that's going places as well.
Ken, would you add to that by talking a little bit about how local brands could basically be bought over and go overseas?
Right. Yeah, I think building a brand, as Nikki said, is extremely difficult, but we have got some examples. But we've also seen good examples of failure. So Trung Nguyen, when they started to go overseas, they were not successful. Fur 24 went to London, was not successful, which actually is quite difficult to understand because Vietnamese cuisine or Vietnamese food is getting a great reputation overseas. In London or the UK, noodles are also very popular, lots of noodle stores. So why was Fur 24 unsuccessful? And I don't know the answer to that, but it just shows that because you're successful here, does not mean to say you're going to be successful overseas. Obviously, things like location are very, very important. Where do you open your first store? It needs to be a flagship store. I look at, for example, when Accor Hotels, Novotel, Sofitel, Pullman came into Asia back when I was a very young man. But they opened their first flagship Novotel in Siam Square in Bangkok. And Novotel really is a kind of 3.5, 4-star category hotel, but they actually positioned it as a 4.5 star. So they built it above spec. Therefore, it was a great flagship hotel for them to use as a base to roll out the brand. So, you know, your first outlet is probably the most important, and it's really important to get that right.
I'd like to talk a little bit about the challenges for you to actually finance companies in Vietnam. Let's start with being a master franchisee. So if I buy an international brand and bring it into Vietnam and I need financing, what would be the key challenges you see as an investor and financier to be able to help them?
Okay, maybe I could turn the question a little bit around from my perspective as an investment professional. So I'll tell you what we look at when someone comes to us with a proposition, a master franchise, or an opportunity. So the first thing I look at, which is about 70% of my decision, is the management team. I want to look not just as one entrepreneur, I want to see a team. I want to see a team that's worked together in the past, ideally, and not a new team, because new teams tend to break up quite easily, especially with the strains of a startup. So I look at the management team. I want to make sure that they're aligned, that they have their own money in the business. I want to make sure the management team is incentivized, that they have some kind of options. And I want to make sure that they put what we call pen to paper. We want to make sure that they're disciplined, that they have plans, and that they can clearly articulate their strategy. And if they're unable to articulate their strategy, you know, how can we really understand it? So that's first is management. The second thing I look at, especially as a startup, is what's the market opportunity? And if it's too niche a market, I will pass. One example, you know, a professional came to me pitching the WebMD of Vietnam. You might know WebMD. It's an online doctors forum. And so I had a quick look at the market cap of WebMD in the US. I had a quick look at the market cap of WebMD in Japan. And even if they became the market leaders, their market cap would be like, you know, $10 million. So if the market opportunity, the size isn't big enough, we won't do it because not every investment wins. So the one that does win, you want to make sure it's a huge market opportunity, right? The other thing I look at are returns on capital. I look at how fast you get your money back from cash flows. And finally, valuation. You know, we want a realistic valuation. We want a good structure, transaction structure. So these are some of the things we look at.
Don't be put off by his WebMD story, because they've actually completed their first round of $1.5 million. But I think all the points you made about that are quite valid. But there are people out there that look at it maybe from a different perspective than Nicky. So I think knocking on a lot of doors is also important. But before you start to do that, you really need to have a very good and well-documented business plan. You need to have realistic cash flow projections and how you're going to build the brand and roll out new outlets. So that's very important. And then I agree with Nicky fully that the management team, the track record, or even, you know, non-executive directors that sit on your board that have a track record themselves, then that have a successful track record in all companies that they've been involved with. Because when private equity starts to look at that, or when financiers start to look at that, they'll take a lot of comfort that a guy that's been successful in his career, even as a non-exec, is not going to join a company that he doesn't think is going to be ultimately successful. So,
can I understand that you're helping a lot of companies with mergers and acquisitions and those deals that you help consulting? What are you seeing as the key challenges from your perspective as a consultant?
Well, on M&A transactions generally, valuation is the biggest deal breaker. The difference in expectations between buyers and sellers. And to be honest, when you look at some of the multiples in the marketplace here, they are quite high. But you know, Vietnam is a dynamic economy. It's the fastest growing economy in Southeast Asia and probably Asia this year, depending on what India does. So there's a great story around that, which is attracting a lot of people. And we also know from historically, I was in banking for 14 years. There's what we call the lemming principle. People rush in and they tend to throw a little bit of caution to the wind very often, because getting a deal and getting a foot in the market is more important than actually doing their due diligence properly. But you know, I think the kind of groups we're seeing coming in here today, particularly if you look at retail, Central Group, Lotte, they're all very serious, and Family Mart from Japan. So, but most of those are financing themselves initially, and then they will start to roll out franchising, local franchises. But then we have a client at the moment who has, I mean, over the last 12 months, they built up a new business. I think revenue today is over $1 million, but they've done it by tapping family and friends for individual outlets. So instead of investing in the business, they're getting investment into each new outlet that they open.
What about the local Vietnamese brands being valued to be able to sell to investment managers like Nick?
Well, I think that comes down to performance results and forecasts. And forecasts, of course, have to be realistic. So when you're looking at a valuation of a business, you're looking at the next 5 years free cash flow projections, and that's how you're going to derive a valuation, because it'll be based on a discounted cash flow, but also taking into account kind of transactions that are taking place in the market and looking at the multiples that those transactions have been completed at. So it is very much, again, around the business plan, good conservative cash flow forecasts for an investor to be able to see what is the return on his investment going to be, what's the internal rate of return over 5 years.
And from your perspective, what will you look at to buy over a local brand?
As I've mentioned, it's really management, the market opportunity, returns on capital, and valuation. I just want to add one point to Ken's point on valuation, is sometimes on an early stage investment, it's all scenarios. You have, this is what Vietnam will look like in 20 years, and we'll have this much market share, and so this will be our revenues. But frankly, we all don't have any idea. So how do you deal with a situation like that? So one thing we use is something called a promote. What is our promote on the previous financing round? So if the friends and family and the founder came in at a certain price per share, how much has the business de-risked relative to how much more will we pay for the business? So we use that also as an indicator, just to add to the methodology.
So you obviously have been working with quite a few local companies here to see if there's an opportunity for you to buy over. What are some of the, let's say, some of the examples of expectations from the local companies that are just unreal?
Yes, so we have quite a few of those. So we've looked at about 25 companies to acquire in the last 18 months, and we've only bought one of them. And we've actually spent a lot on due diligence, using firms like Grant Thornton, which cost a fair amount to do a thorough due diligence. It doesn't come cheap. But we think it's very important and valuable to do so. So some of the transactions have fallen apart. One for valuation, big gap in valuation. Generally, we use a multiple of EBITDA, which is gross cash flow, and many people ask about twice as much as we are prepared to pay. We won't hit our returns if we pay that much. So one is valuation. Another couple interesting ones we've had is sometimes the companies are too messy. What do I mean by that? As you know, in Vietnam, very few people pay their taxes. They have 3 sets of books. But when you have like 100 restaurants and each of them is doing that, it takes 2 years to restructure a business like that. So we would pass on too messy of a situation. And finally, we had an interesting one last week that, we went through due diligence, great company, great brands. We thought we could do the deal. But at the end, in the last meeting, they came to us and they said, we want to see the love. I was like, excuse me? Yeah, we want to see that you love us. And I was like, we all define love differently. My mother defines love as tough love. Do you want tough love? Do you want soft love? And, we didn't do the transaction. So it can be all kinds of things.
You didn't have enough love.
Yeah, Nikki, you raised a very important point there on basically on what I call governance and financial transparency. And it does severely impact valuation. If somebody comes to do due diligence, you don't have proper accounting, you've got 2 or 3 sets of books, it is going to impact the valuation quite severely. We've just launched a service for startups, provided they're working within an incubator or an accelerator. We will provide accounting and compliance services to those companies, so when they start to look for capital, they'll have proper accounting records, they'll be compliant, and that will help them get a higher valuation. We're actually doing that on a very low cost basis, but we're taking an additional kicker when the first round of capital is raised.
So if let's say if there are 3 advice that you would like to give to the local company here, to set them up so that they, a few years later, would be able to sell or would be able to acquire, to actually sell to a strategic partner or completely to a finance, an investment fund like Nick, what should they prepare and how should they implement it?
Well, I think it's important to, start from day one. If you're going to build a house, you actually build it on a solid foundation. And that's the way you need to build a business. That's the way I've built my business, and I really believe that. So it's having a good management team in place to implement a very robust business plan and being compliant. And even though as a Vietnamese company, you don't need audited accounts, you can cheat on your tax because you've got 2 sets of books. I think it's very important to kick that out of the door. We know as a long-term strategy that doesn't work, and then certainly if you want to attract international investors, whether they be angels, private equity, or banks, or partners, that strategic partners. That's the first thing they're going to look at. And as I say, if you don't have those things in order when they do due diligence, then they're going to hammer down the valuation.
Should I add to that?
Just echo Ken's comment on start with the exit in mind and then work backwards. That's what we do. I would also add that you probably want to invest in your MIS systems, your management information systems, really getting the architecture right, because if you don't and if you grow too fast, the problems compound. So I would encourage you to start slowly, really nail down your systems, grow slowly, and then when you're ready to scale, then scale up. So.
Well, if I'm a company that has been in operations for, let's say, 5 or 6 years in Vietnam with a very messy situation, what would be your advice for me?
Call me. No. Obviously, we can come in, we can help look at the control systems, the risk issues around the business. We can help you get your accounting systems in order. And then more importantly later, we can go through what we call a vendor's DD, due diligence. So we will look at everything that a buyer will want to look at in the due diligence process. We'll make sure that everything is in order. So when the buyer comes in, his due diligence is a very easy process. And when they see that, they like it. And that's why they will pay a higher valuation.
At that stage, call me.
So I have to call you both. Just the last question before we give the mics to the floor. There is a recent trend in refranchising internationally. Would you like to touch on that and give your perspective?
Yeah. So over the course of the years, I'm sure all of you have seen the big brands start to buy back their own stores, and they call them company-operated stores. Then you see the pendulum switch, and they start to franchise them out, refranchising. But what we're seeing in the last few years is investors are awarding companies that are pure franchise models. So if you look at what they trade at on the stock markets, there's a significant premium if your company is a 100% franchise model. So it's like a royalty stream. You don't take so much downside risk. So this is just something to consider as you build your brands, that's the ideal position to be in. It's not necessarily an aligned situation to be in, but it's a preferred situation to be in. And that's the current trend that's going. McDonald's, for example, is going on that shift towards refranchising. Domino's in the US is an example of a 100% pure franchise model. So rewarded by investors for that.
Yeah, just a bit of historical information. And talking about McDonald's, I remember when they came into the UK, they did not want to open their own stores because that would have impacted on their earnings per share in the US. So they actually, effectively, they got a nominee to open their first 5 stores. The bank, I arranged the finance for that. I remember at the signing ceremony, they brought in Big Macs and milkshakes, but rather than wine and caviar, but anyway. So for the first 3 years, until those stores started to become profitable, they remained as a third-party franchisee, and then they bought back the stores when the business was actually profitable. So my point there, apart from the story, is make sure you understand what the franchisor's intent is for the long term, right? Because you don't want to set up a business and build a business for them. You actually want to build it for you, unless you know from day one that they're going to buy that business back in 3 years or 5 years, and you negotiate the price ahead of time. But so I think you need to be clear what their intentions are, as well as them being clear on what your capacity capabilities are. And I think also, I'd say the first port of call for financing, if you've got a good management team, if you've got a good business plan, would be the franchisor themselves, right? Because they're quite often willing to put a certain amount of debt finance into a new market. So.
On that note, can I ask Nick another question? Since you're financing master franchisees, if the franchisor themselves are actually changing strategies and that somehow influence the growth of the brand in the future, especially for a market like Vietnam. How would you deal with that situation? Because you are the financier of the master franchisee in Vietnam.
So we had a situation exactly like that on a recent deal that we didn't end up doing. The story was the Singapore, franchise owner. Sorry, the Singapore license had franchised out Vietnam, and they were about to be sold to someone else, and so they weren't really supporting the franchisee. And so, what we decided to do was a complete rebranding. In a situation like this, we would do a transaction as an asset deal, meaning we buy the business, but not the company. It's called a hive down. You take the business all into a new company and you do a rebrand. But this was a situation, both sides were in default of the agreements. So, not much you can do. And the brand wasn't that famous internationally that you couldn't do a relaunch here. So that was a hive down we did.
So coming back to my points on franchisors' intentions, we see quite a lot that, they're trying to just open as many stores or as many outlets as they can, even though they're continuing to make losses and the losses are growing. And that is a clear indication that they're planning a sale. So you need to be aware of that. So when you're looking at a franchise, do look at the performance of the franchisor, look at their last 3 years audited financial statements, and from that you might also get an idea of what they're planning to do. Because if they're planning to sell the franchise, they're not going to tell you. You've got to figure that out for yourself.
Thanks a lot, Ken and Nick. Một tràng pháo tay lớn cho hai người speaker của chúng ta.